Hello, everyone. My name is Nathan Corey, and I'm joined by Dan Brown from Richardson Capital Management. And we are here today with the economic and investment update for the month of November 2025. Well, Dan, after about a 6 month run of pretty impressively strong performance in the financial markets, we saw a bit of a pause from investors in the month of November with most indexes, about flat on both the equity and fixed income side. And one of the big themes that we saw this month that we'll circle back to is that whole AI trade. And, while that was a tailwind for the markets for the past 6 months, we saw investors take a bit of a pause in November with some concerns that maybe that whole trade had been overblown. And thus we saw some muted returns. But one of the big issues we've been focusing on for the past number of months has been on the corporate earnings side and, making sure that the earnings are keeping up with the price appreciation that we saw. As we saw the third quarter earnings reports come to a close. You want to give a little color on kind of what we saw on the corporate side?
Yeah, so we kind of teed this up last quarter in our economic update from October. And in November, we saw companies wrap up for a third quarter earnings, and they were unequivocally very, very strong, both on top line revenues and then bottom line earnings. And it was really broad based. So most economic sectors saw growth, most saw, beating expectations. So again, very, very strong. And this basically just continues a string of 3, 4 quarters in a row where companies are beating expectations. So we think a lot of that has to do with going back to that April time period where the tariffs were announced, that those Liberation Day announcements, and a lot of analysts took their expectations down quite a bit, thinking that the tariffs would really impact the economy and corporate earnings, and they really haven't, which is surprising to a
Mhm.
lot of people, I think, including us. So again, we wrapped up another third quarter of very, very strong earnings and revenues, and we think that'll continue into the fourth quarter once we see those results, and we see no reason why that can't continue into 2026. So again, we think that's going to be a powerful theme to come here.
And then the other big issue hitting the financial press in the month of November, obviously, was the government shutdown, the longest in U.S. history. Obviously, had major implications for government employees and anybody that relies on various government services. But what did it actually mean for the economy, and how do we feel that impact going forward?
Yeah, we think it'll impact the economy for fourth quarter GDP. Kind of a minor hit to some services. If there's some capital goods, we think those maybe were put off or postponed by a couple
Mhm.
weeks. But again, we think there'll be a minor hit to fourth quarter GDP. But looking into 2026, still pretty positive here.
Got it. And Dan, circling back to that AI theme, again, a key concern on the mind of investors is whether or not that whole trade has been overblown and whether or not the valuations are justified. And I thought it was interesting just to look back on the adoption of AI and what implications that has had on the consumption and production of data and just the quantity of it. A lot of experts are putting this whole AI theme along the same lines as the adoption of the internet, the use of smartphones, things like using video meetings that we're using today, just how transformative this technology has been. And a really interesting piece of data that we found is just looking at the magnitude of how much data is produced and consumed in 1 minute in 2025. In 1 minute today, there's 5.9 million Google searches being completed. There's 251 million emails sent, and there's $43.6 million spent online shopping just in 1 minute. So you can clearly see this is a transformative technology that's ramping up the use of data. So there's no question that it's been a huge impact in the technology in lives of consumers. But what has that actually meant for revenue and earnings for companies, and how profitable is this trade?
Yeah, I think most of the headlines that our viewers have seen are around the spending that these large tech
Right.
companies have done, but they really haven't discovered, if that's led to revenue growth. So the other graph that we're showing here is just the amount of revenue growth, both for the cloud, which has been around basically since 2016, and then more recently, this AI theme, artificial intelligence. So the graph basically shows that with the blue, the public cloud growth, that's been fairly steady. But where we've seen exponential growth has been on that artificial intelligence. So all these large language models that many people are using, again, just explosive growth there in revenues. So again, most of the negative headlines that are out there are that maybe tech companies are maybe spending a little bit too much on all
Hmm.
of these technologies. But the underlying important theme for us is this is actually leading to tangible revenue growth. Currently, we expect revenues to continue to grow for the next couple of years. So maybe taking a less bearish viewpoint than some of the headlines, because again, the spending is leading to very strong revenue growth.
So, Dan, putting that all together, again, we had a pretty strong run in the financial markets, bit of a pause in the month of November. But I'd say overall, we're still feeling fairly optimistic coming into year end and going into 2026. Do you want to give any, additional color on what we're expecting from the financial markets, from the Federal Reserve as we kind of come into year end here?
Yeah, so despite the pause that we saw in November, still retain an optimistic outlook, for the next couple months into next year. Reason being, we already talked about strong corporate earnings. We expect to end this year, 2025, at a double-digit earnings growth rate led by technology information themes. And then we expect that to continue into next year. We have not seen expectations for next year decline at all. So still holding at a double-digit level,
Hmm.
we think that's realistic. So optimistic on earnings. And then other reason we're optimistic is we expect more interest rate cuts from the Federal Reserve. So investors debated whether the Fed will cut in December or wait till January. We're indifferent on that. It's not so much that a timing issue is the fact that we expect more interest rate cuts. We think over the course of the next year, the Fed could cut rates by an additional, half to three quarters of a percentage point. So again, going back to the mantra of don't fight the Fed.
Got it. Well, with that, we want to thank you for watching. Always appreciate your continued trust and support. We hope everybody had a really great Thanksgiving with their families. I'm looking forward to a safe, happy, and healthy holiday season ahead.